For a long time, we've known Singapore as a small country with a super strong economy. High income per capita, almost no unemployment, everything runs smoothly. But lately, the story has started to change. Their economy is stalling. Prices are rising, and the people are starting to feel real pressure. It's not just big companies complaining. Housewives, office workers, taxi drivers, hawker stall owners, everyone is feeling the impact. What is really happening to Singapore's economy? And what's it like to be an ordinary person in the middle of this storm? Let's break it down. The economy stalls. Let's start with the numbers. In the first quarter of 2026, Singapore's economy grew only 4.6% compared to the same period last year. That number is still positive. But the problem is, it fell far short of economists' expectations of 5.9%. Even worse, compared to the previous quarter Q4 of 2025, Singapore's economy actually contracted by 0.3%. This is a serious signal of weakening momentum. What's the main cause? A global energy crisis triggered by conflict in the Middle East. Disruptions in the Strait of Hormuz have sent oil and gas prices soaring, and Singapore imports nearly 100% of its energy needs. The hardest hit sector is manufacturing, especially the petrochemical industry. Its growth crashed from 11.4% to just 5% in a single quarter. As a result, many companies are holding back on expansion. Some have even started cutting working hours. Major banks have revised their forecasts. DBS Bank expects Singapore's growth this year to be only 2.8%. UOB is even lower at 2.5%. The most optimistic is Maybank, but even they predict only 3.4%. Clearly, no one believes the economy will return to the glory days of 5% growth anytime soon. Inflation eats away at purchasing power. When the economy slows, prices usually fall. But not this time. Inflation is actually rising. The Monetary Authority of Singapore revised its core inflation forecast, which excludes transport and accommodation, to a range of 1.5 to 2.5% for 2026. March 2026 data showed core inflation already at 1.7%, while headline inflation reached 1.8%. It's not as high as the 2023 crisis, which touched 4.8%. But the impact is still real, because wage growth isn't keeping up. Last year, real wage growth for workers was only 0.4%. That means their purchasing power is shrinking. What does this look like on the ground? For example, cooking oil prices have gone up 12% in 1 year. Household electricity rose 8% per kilo. And because almost all food is imported, the prices of vegetables, meat, and basic necessities have also climbed. A housewife interviewed by local Singapore media said her monthly grocery bill has increased by about 82 cents Singapore dollars, roughly owned to 1.3 million rupiah, without buying any extra items. That is a real burden. Busnesses, artist workers are hurting. On the business side, the situation is just as tough. A survey conducted in mid-April 2026 found that 96% of companies in Singapore are experiencing a surge in operating costs. Breaking it down, 70% complained that utility and fuel costs have jumped. 59% felt the rise in raw material and supply costs, and 53% were hit by higher shipping costs. Facing this, nearly 40% of them have a negative outlook for the next 6 to 12 months. Some companies have been forced to raise prices, but others, those that can't raise prices due to fierce competition, have started laying off workers. The job market is feeling the pressure to companies' hiring expectations for the next 3 months plummeted from 54.6% to just 44.6%. That means fewer new job openings, while the number of job seekers is rising due to layoffs in certain sectors, especially energy-intensive and import-dependent industries. The government did announce that 19.1 billion Singapore dollars, around 255 trillion rupiah, in investments were secured in 2025. These investments are expected to create 15,700 new jobs. But that number is the lowest in a decade. And 2/3 of those jobs pay above 5,000 Singapore dollars per month, about 66 million rupiah. That means low and medium-skilled workers are still struggling to find opportunities. A taxi driver interviewed by local media said his income has dropped 30% over the past 3 months. Fewer passengers, while fuel and car maintenance costs have gone up. This is a snapshot of informal workers in Singapore voices we rarely hear. government response and public anxiety. The Singapore government hasn't stood still. They have prepared a relief package of nearly 1 billion Singapore dollars, around 13,4 trillion rupiah. This includes direct cash transfers for low to middle income households, as well as fuel vouchers. The Monetary Authority also took a technical step by strengthening the Singapore dollar. The goal is to make imports cheaper, so inflation pressure can be eased a little. But this move carries a risk it could hurt export competitiveness. Prime Minister Lawrence Wong has been honest with the public. In his May Day speech on May 1st, 2026, he said candidly that growth this year will slow and inflation will be higher. He warned that businesses, workers, and households will feel the strain. For the middle class, adaptation has already begun. Many are postponing plans to buy a new car. Eating out has become less frequent. Overseas holidays, which used to happen twice a year, are now once a year or postponed. Some have switched from premium supermarkets to traditional wet markets or discount stores. Still, Singapore's social safety net remains strong. The Central Provident Fund's CPF housing subsidies and health insurance mean people don't fall too hard. But anxiety lingers, especially among contract workers and the self-employed. So, here's the bottom line. Singapore's economy is going through a difficult phase. Growth is slowing, inflation is rising, and jobs are becoming harder to find. Ordinary people, housewives, taxi drivers, contract workers are feeling the impact directly. The government has moved quickly, but a global storm is hard to avoid, even for a country as rich and as strong as Singapore. So, will they get through it? History shows that Singapore has always risen from hardship. Only as its chimi, its people need to be a little more patient, a little more frugal, and a little stronger in facing uncertainty. That's the picture of Singapore's economy and its impact on the people today. Thank you for watching. See you in the next video.